All right, guys, I'm going to be straight honest with y'all. This is one of the worst days in the history of cryptocurrency, guys. So let's go ahead. Let's get straight into it. We covered the FTX and Binance news yesterday. And if you think things couldn't get worse, check this out, guys. We're just getting started. Binance is strongly leaning towards scrapping FTX rescue takeover after first glance at the books, a source says. Backing out would be one of the more stunning developments in the collapse of Sam Bankman-Fried's crypto empire. So that's right, guys. So Binance had signed a letter of intent to take over FTX and to buy the exchange, which would, be similar to what a bailout would be in the banking industry. Well, now after looking at the FTX's books, Binance is thinking about pulling out. Guys, this could create a cascading event of liquidations like we have never seen before in crypto. And I'm not just trying to scare y'all. I'm not just telling y'all. I'm just telling you, do what you have to do. Make the best financial decisions. And I'm going to kind of give y'all my strategy and what I'm going to be doing in this event. But I want to kind of go over the news to kind of show y'all where we're at. So let's head over to Twitter, guys, and I want to show you, I liked what a good friend of mine, Crypto Indio, what she posted. A letter of intent doesn't mean Binance will acquire FTX. This is business, and Binance will make the best decision for their business. I would imagine they are considering retail, but then again, the market doesn't care about you. I learned early in life that no one will save you. So Wendy's right. So even though this would be good for the industry as a whole for Binance to acquire this, guys, if it doesn't make sense, they have to do what's in the best interest of their business. Now, Binance is the largest exchange, and I'm against bailouts for Wall Street. I'm against bailouts for big banks, even though we've seen them in the past. And unfortunately, guys, maybe this needs to happen. And I know a lot of you don't want to hear that, but there's so much just uncertainty in this industry right now, and there's just so much happening, and there's just so many bad actors, and there's so many over leveraging situations like this that perhaps this has to happen, guys. And let's head over to CoinMarketCap and let's go look at some of the damage. Bitcoin, guys, down 15% on the day. Ethereum down 24%. Guys, this is some of my largest holdings. So Cardano down almost 15%, XRP down 21%, Polygon Matic, one of my largest holdings, down 25% a day. Guys, Solana, one of my largest holdings, down 45% in a day. This is unheard of, guys. This is guys, we could go lower. Chainlink down 30%. Chainlink down 30%. And the reason why we could go lower, guys, is because if FTX goes under, they have assets. They're going to have to liquidate those assets. When they liquidate those assets, it's going to send the market into a plunge, which would then let other investors will start selling off. And I don't know where this goes, guys. Is this the end of crypto? No, I don't think this is the end of crypto, but this is setting us back, guys. This is perhaps setting us back years. Let's go ahead. Let's look at Reuters posted this. Cryptocurrencies fall after FTX Binance turmoil spooks investors. And guys, the notorious Edward Snowden posted this, and they call me a criminal. Guys, Sam Bankman-Fried, this is some deleted tweets. Check this out, guys. Super disturbing stuff. Sam Bankman-Fried tweeted this. A competitor is trying to go after us with false rumors. I believe he was mentioning the Binance, the tweets CZ of Binance was posting. He said FTX is fine. All assets are fine. Details. Guys, this was posted 2 days ago, November 7th. And he said this, FTX has enough to cover all client holdings. We don't invest client assets, even in treasuries. We have been processing all withdrawals and will continue to be. Some details, withdrawal speed. Guys, this whole exchange may go under. Investors in the FTX exchange may lose all their assets. Guys, it's not just the retail. It's not just me and you. Guys, Tom Brady and Giselle, they put $650 million into this exchange, into maximizing their stake in the FTX cryptocurrency. Steph Curry, I believe was endorsed, or he was endorsed by the FTX exchange. Guys, the FTX exchange, where the Miami Heat play, the arena, FTX takeover could jeopardize a ton of sports sponsorships. So where the Miami Heat play, guys, they have naming rights to arenas. So if this exchange goes under, I don't know what happens next, guys. Crypto finance firm Galaxy Digital reveals 76.8 million exposure linked to FTX exchange. So this is, guys, this is way bigger than Voyager. This is way bigger than Celsius, and it's showing us how early we are in this. It's showing us how many bad actors in this, and it's showing us that maybe we do need some type of common sense regulation. Maybe we do need to flush out all these bad actors before mainstream adoption can happen. And guys, this is alarming to me. And y'all know on this channel, I give y'all the good news. I give y'all the bad news. I let y'all know what I'm doing. So let's talk about more, who's left. Who's left? So Coinbase. Coinbase is seeming to be one of the last big players standing. Now, again, guys, as we can see what Sam Bankman-Fried said, who I believe at this point needs to be in jail, a thorough investigation needs to happen. And Coinbase said this, guys, why Coinbase won't end up like FTX. Brian Armstrong, the CEO of Coinbase, says Coinbase CEO reiterated what makes his company business model less prone to bank-run style events. Coinbase CEO Brian Armstrong argued on Tuesday that exchange isn't vulnerable to the sort of fallout suffered by FTX this week. He said the event surrounding FTX appears to stem from risky business practices that Coinbase doesn't engage in. So he tweeted this. This event appears to be a result of risky business practices, including conflict of interest between deeply intertwined entities and misuse of consumer funds, lending user assets, explained Brian Armstrong. So Coinbase CEO has no interest in buying FTX US. Coinbase stock price tanks 10%. Guys, Solana down 93% from all-time highs because of its exposure to FTX and Alameda. And guys, let's go to Twitter. Brian Armstrong, the CEO of Coinbase, he tweeted this. First of all, I have a lot of sympathy for everyone involved in the current situation with FTX. It's stressful anytime there is potential for consumer loss. Second, Coinbase doesn't have any material exposure to FTX or FTT and no exposure to Alameda. That's good news, I guess. I think it's important to reinforce what differentiates Coinbase in a moment like this. This event appears to be a result of risky business practices, including conflict of interest between deeply intertwined entities and misuse of consumer funds, lending of user assets. Coinbase has always strived to be the most trusted player in the space, and we don't engage in this type of risky activity. We don't do anything with our consumers' funds unless directed by the consumer. We hold all of our assets dollar for dollar, and users can withdraw their money at any time. We are incorporated in the U.S. and publicly listed in the U.S. because we believe in transparency and trust are so important. Every investor and consumer can see our public audited financials, which show how we hold consumer funds. We've never issued an exchange token. Part of the issue here is that regulators have been focused onshore in each of their respective markets, while customers moved offshore to companies which more opaque and risky business practices. To take the U.S. as an example, 95% of crypto trading has developed overseas because crypto regulation in the U.S. has been hard to navigate. That's bad for U.S. and Americans are still losing money in these overseas blowups. The temptation from events like these is to call for more heavy-handed regulation. This would make the problem of crypto companies and crypto users going overseas worse. We should continue to work with policymakers to create sensible regulation for centralized exchanges, custodians in each market, and we've been doing so for some time. But then we need to see a level playing field enforced, which hasn't happened to date. Long-term, the crypto industry has opportunity to build a better system with DeFi and self-custodial wallets that don't rely on trusting third parties. Instead, you trust the code, math, and everything can be publicly audited on-chain. This is a topic for another day. We decided early on to be the most trusted crypto company out there, and the events of the last 24 hours underscore why this has been so important. We'll continue to work with regulators around the world and help build trusted and reliable products for the industry. So, guys, again, this is Brian Armstrong, CEO of Coinbase, saying this. But again, guys, who do you trust at this point? Voyager Digital said the same thing, guys. I met the CEO of Voyager Digital in Miami at the Bitcoin conference. Seemed like a good, trustworthy guy. Again, I don't want to speculate too much on that situation. Sam Bankman-Fried, the youngest billionaire in crypto, and look what's happened, guys, overnight. And what we're going to see these markets continue to tank. This, without question, has set the industry back perhaps years. And if you were somebody that was hoping for positive crypto regulation, this is gonna, probably be what's gonna start some really, really bad regulation for the crypto space. And what I believe Brian is saying, that when the bad regulation comes, then the crypto exchanges and different crypto projects will move overseas where there's less regulation, which would then give exposure to United States investors, which could create the problem all over again. Again, guys, I don't know what to tell y'all. Make your own financial decisions. Me personally, what am I doing? I'm buying, fellas. And that might be the wrong decision. I'm not going to go crazy. I'm going to I'm going to take a day and really think about this. I'm going to see what the markets do tomorrow. Again, guys, a lot of uncertainty right now with the midterm elections going on. I think there's just a lot of uncertainty in the world. This is perhaps the worst time for this to happen. And I don't know, guys. I just see too much mainstream adoption. I just see too much industry getting involved behind the scenes. The likes of Amazon and Google. And, guys, Google just partnered with Solana. And this happens. As far as, my risk tolerance, guys, man, I think I'm sticking with my blue chips, guys. I will be buying more Bitcoin. I will be buying more Ethereum. I will be buying more Polygon Matic, potentially more Cardano, maybe some Algorand. I don't know, guys, but I'm feeling right now that this long-term could be a buying opportunity. But again, guys, you might not have the same long-term mindset that I have, because I believe in the technology. I believe the industry will recover. I don't know how. Be honest with y'all, guys. This is a black eye that is going to set the industry back years. So anyway, guys, make your own financial decisions. This is not financial advice. This is a terrible time. I give you all the good news. I give you the bad, and this is really, really bad news. Anyway, guys, if you've made this far in the video, I'm Classic Kev. Thank you so much for watching, guys. Turn off the computers, turn off the phones, go walk around, get outside, get in nature a little bit, guys, and everything's going to be all right, y'all. I'm Classic Kev. I'm out. Peace.